Reflections on those MSTR Bitcoin earnings. The strategy model is good for BTC. But what about the rest of crypto? CoinDesk Indices Andy Baehr has questions. MSTR earnings came out May 1st. My morning media stops last Thursday here and here asked for a preview. We don't talk about stocks, so I plan to zoom out and hit themes. While preparing, I had to suppress the eye-roll reflexes that MSTR triggers. MSTR, of course, is the ticker symbol for MicroStrategy or Strategy, as the company is now known. Strategy, fronted by Michael Saylor, pioneered the Bitcoin treasury model that's now been copied by Metaplanet and dozens of other companies. Strategy plans to raise $84 billion, according to its most recent announcement, across equity and fixed income instruments. Here are 3 questions. 1. Earnings? MSTR earnings and price targets are, well, they don't really mean the same thing, especially once the effect of ASC 2023 to 2008 is backed out. It's just the price of Bitcoin and financing, plain and simple. Wall Street analysts and pundits should get that right. 2. Strategy? You can't just say, strategy. You have to say, strategy. You know, it used to be MicroStrategy. Like Prince, Puff Daddy, Kanye West, and Twitter. NB, folks say strategy. Small s. A lot already. 3. Don't be a hater? MSTR supports a market cap of $107 billion with Bitcoin holdings of $53 billion and laser-eyed goodwill. No lifeboat, no parachute, no apparent plan B. If it fails, the Bitcoin market could take the blame. Those eye-rollers, and some obsequious media coverage notwithstanding, we can agree that the capital raises are truly awesome. The force is strong in this one. MSTR is up 36% on the year, compared to less than 5% for Bitcoin. Who am I to throw stones? MSTR cleverly uses stock price volatility as a feature, not a bug, for 1, issuing mouth-watering converts, 2, attracting listed options volume, and 3, corporate yield strategies. Just please stop calling option selling a yield strategy. And I said strategy again. Smalls, the preferreds, STRK and STRF, hit the mark with some folks who like preferreds. Some of my preferreds friends are smitten. Strategy, big S, has not only created a movement, but a category. Levered MSTR ETFs, including this new one which pays income, serve the market for whom MSTR 70 vol is dull. Grayscale announced an ETF that tracks 30 companies that hold at least 100 Bitcoin. Last, but not least, Cantor Equity Partners, a SPAC, is merging to form 21 Capital, which will hold $3 billion of Bitcoin. Mention this trend in a room full of pundits and they'll yell GameStop in unison. It's fun. This is all fine. Adding Bitcoin to the treasury of non-crypto companies asterisk is an interesting trend. And that doesn't include crypto-native companies, like CoinDesk's parent company, bullish. But it's only Bitcoin at the moment. Despite the loosening of U.S. regulatory zip ties on digital assets and the recent flurry of ETF filings, Bitcoin still dominates the conversation. It still accounts for about 2/3 of the total cryptocurrency market. Again, that's fine if we are talking about a store of value asset contributing to a corporate treasury otherwise allocated to cash and treasuries. However, the growing number of flavors of Bitcoin exposure leverage, yield, optionality, protection are taking the place of education about what other blockchain assets hope to deliver, and why it is important to spend more time thinking about the asset class. Until recently, that was fruitless for many investors and advisors, since brokerage or futures account implementation was not available. Of course, it has been for ETH, but you need more than ETH to think about the digital asset class. Lack of enthusiasm for ETH investment vehicles, we believe, has struggled in part for this reason. If 2024 was Bitcoin's coming out year, we hope that 2025 gives investors and traders opportunities to think deeper and more broadly, and to implement accordingly. If not, the U.S. crypto investing narrative will start to sound like a Bitcoin maxi, and that feels like leaving money on the table. Andy leads research and product development of digital asset indices and strategies at CoinDesk Indices, bringing 25 years of global markets and investment management experience to help improve crypto trading and investing for everyone. Prior to joining CoinDesk, Andy was a partner at Risk Premium Investments, an alternative asset management firm serving institutions. Earlier, he held leadership roles on derivatives desks at Credit Suisse, BNP Paribas, Morgan Stanley, and Deutsche Bank, focusing on options, structured products, and systematic strategies. Andy holds BA and MBA degrees from Columbia University. He is a CFA charter holder and holds the CAIA designation. Since 2008, Andy has served as a board member for Goodwill NYNJ.